Hello everybody, and thank you for joining me today. My name is Gabriel Brent, and today for our training session we are going to be talking about the quarters theory and how the quarters theory and the zones work in confluence with one another. So with that being said, we have a special guest here today. This is Gary from the Apizones community. He's been trading for quite a while now, and he's going to share with us a little bit of what it looks like, how it works, and all the finer details of how the zones and the quarters theory works in harmony with one another. So without further ado, Gary, will you take it away?
Yes, thank you. Thank you very much, Gabe, for the introduction. Good morning, everyone. Like Gabe said, he just wanted me to talk about the quarters theory and how it's, the mindset behind it and the methodology, etc. So I trade mainly the foreign currency market. I used to trade futures, did some options. I used to be a broker a long time ago, so I've been in the financial realm for a very long time, since the 90s. But one thing that's always boggled me is, why does price do what it does, especially in foreign currency, where I remember back when I started trading foreign currency, was just, gosh, almost 20 years ago. The foreign currency market would trade, I guess, almost $1 trillion a day. Now it's trading $3 trillion a day. So it's heavily weighted with the banks, and trading using technical analysis, it works. It doesn't always work 100% of the time. Nothing's 100%. However, it just always boggled me why price does what it does. So under further research, I ran across Ilyan Yotov, who actually has been involved in the currency markets. Actually got it partially from his father. I forgot what country they're from. However, his father was busted for currency information on the black market in his country, and that's kind of how Ilyan got involved with the foreign currency markets, and he's been a big proponent of them for a very long time. He came out with the quarters theory back in 2005, and the idea behind it is there's round numbers. So, for example, I can show a couple charts here to make it simple. This is the Aussie yen chart. Gabe, you can see my chart, right? Everyone can see my chart, my screen?
Yes, we can.
Okay. As you can see, there's a red line here. This is 80. This is actually a large quarter number. The quarters theory is based upon round numbers, essentially. So let's say you take 1700, and actually, let me pull up another chart here. I'm trying to give a good example without confusing everyone here. So on this chart, we see 7,500. If you go down to 7,000 up to 8,000, that's 1,000 points. In between the 1,000 points, there are 4 segments, and those are called major quarters. So if you take the human body, divide it into 4, you got your knees, which is the first quarter, your hips, the second quarter, your abdomen or your rib cage, up to your rib cage is your third quarter, and above that's the fourth quarter. It's kind of the same idea with the quarters theory. Those are major quarter points where price will stay for a certain period of time, and then it will go above it or go below it. So the quarters theory is every quarter is 250 points. Then you have half quarters, which are 125 points, and then you have small quarters, which are every 25 points. So on my screen here, I've illustrated that 7,500, this is the Aussie yen chart, is 7,500. That's a major quarter point. And this is the 30-minute chart. I just took a snapshot of this just a few minutes ago, about 15 minutes ago. And as you can see, price has hung out around this red line right here. The other dash line here is just simply a weekly pivot that I put on there that just reiterates the significance of that area. And then below every major quarter point, below and above is called a hesitation zone. And hesitation zone is exactly 75 points above or below the major quarter point. And that's typically where price will jump and touch before it retraces, or it'll blow through it and hit another another quarter point. So the idea behind this is just to give you know, the retail traders some perspective on what's going on, what's significant about the round numbers or the quarter points, and I use it in addition to the apozones, where as an example here, I can flip back over to the 15-minute. So on the 15-minute time frame here, we had the 7,500 zone, which it crossed through yesterday. That's a major quarter point, and looking for it to go up to 75.75, and it didn't reach there. However, as you can see, around 75.50, we had a zone that was created on the 15-minute chart by apozones, and then I use the smaller time frame as the 2-range chart, or like Gabe likes to use, the 1-minute chart for entries. So I have the lines drawn on my chart to illustrate those areas, so I know where price is likely to touch and go down, reverse, or blow through those numbers. The great thing about the quarters theory too is that it shows how price will stay within an area for a period of 3 days. Typically, price, depending on the currency, for example, on the Aussie yen, let me see if I can find that chart. Brought it up here. Yeah, here we go. So you can see on the Aussie yen here how back on the 21st, it was above the 80 line, which is the major quarter point, and then it dropped down and actually touched the other quarter point, which is 78.75. And actually, Gabe and I actually talked about this on Monday, where he goes, I think price is going to break down today, and I said, I think I agree with you, because today's the 3rd day, and typically price will trade within a certain range for a period of 3 days, and after 3 days, it has to figure out, well, am I going to stay within this quarter point region, or am I going to move above it, or or go below it even further? So this is more with trend, as Gabe was talking about earlier. Trend is your friend, but it's always good to have the high level, the 30,000-foot view on what's going on from a quarters theory standpoint on where the market has been and where it could potentially go. And along with apozones, it helps present conviction, if you will, for me at least, to pull the trigger on trades, because as a small retail trader, what we need to get into trades is conviction, and the more conviction you can have with something illustrating on your charts, hey, this is an area that you need to get into, short or long, is beneficial to everyone. So that's how I use the quarters theory, and it's just, it helps having apozones. The apozones really helps just reiterate, hey, look, price, along with the price action failure module, just helps me have more conviction in taking trades. Any questions? Here you go. Here, I'll just pull this up.
Yeah. So this is the TradingView software, and I actually, on pretty much Gary's hinting, I went ahead and made the quarters theory for a platform by the name of TradingView. It's a web-based platform that we're going to be doing a lot of stuff on here as far as apozones software and whatnot. But quarters theory is pretty simple. There's majors and minor lines. So right now we're looking at, I guess it is the 15-minute charts you're looking at that 15-minute chart, and we have all the levels automatically plotted for us. So I just think it's nice to, of course, me being the programmer that I am, I don't want to draw lines on a chart, even though it's not hard.
It is an arduous process, Gabe. So I agree with you. It's but you know, it's kind of second nature to me now since I've been doing it for a while. But I understand exactly. Why not have something? If we could have artificial intelligence drawing on the chart for us, why not? So we appreciate that.
Mm-hmm. And I think I'm going to do another version of this software actually, to where as it, let's say price has been below a quarters point and then it closes above a quarters point. I'm looking at potentially like a major or minor quarter point. Then I'm looking at actually painting the bars based upon the quarters theory quote-unquote trend. So I thought that might be an interesting paint bar. So don't know what that looks like yet, but it's on my list to do for the quarters theory indicator. And that is a free indicator on TradingView. If you guys want to check it out, please feel more than free to do so. But it's pretty cool how that actually works there. So
yeah, that was even more detailed perspective on what's going on.
I have a question.
Hey, Michelle, how are you?
I'm good. How are you?
Fine, thanks.
I may have missed this. You may have said it, and I apologize if I'm asking you to repeat something.
That's fine.
But where do you start these quarter points? Are they based on a particular move that has happened, or is it just quarters in the price?
It's quarters in the price. So if you start from 1, the number 1 all the way up to, you know, for example, I have the Aussie yen on this chart right now. 80 is a major quarter point. So if you subtract 250 points from that, you get 77.50. So just think of, you know, like what entity do you trade right now? Is it mainly CL and YM?
YM.
Okay. What's the Dow at right now?
I've seen this theory based on like a particular move and then turning it into quarters. I've never seen it based on, I have not yet seen it based on this, and it's intriguing. So I'm just curious as to how, because I know it can translate. I've done it on the YM.
Yeah,
based
I
on
think,
the move.
I don't know why this is not there. Okay. So, okay, so if we were to take the Dow, we can start at 18,000 because that's a round number. The next 1,000 points below that would be 17, 16, 15, you know, et cetera, and then moving up. So to take the YM, we can draw a red line right here. This would essentially be the major quarter. So I'm just going to draw that on the chart here. I don't know why it's not showing yet. That's weird. Oh, there it is. Sorry. All right, here we go. So we take 18,000, and then we add 250 points to it. So 18,250 would be the next quarter. And this is not based on price action. This is solely based upon numbers to answer your question. And the next would be 18.5, 18,750, and then essentially 19,000. And then we take those and divide those into half quarters, which are 125 points. So, yeah. So it's exactly half of what we have here. So what this does is it just provides structure I can't remember. I used to trade the YM and the S&P and the NASDAQ minis a while back. And I can't remember. I know round numbers were very significant. So, like 18.5, we can go back here. Let me go back to the daily chart. Let's see what it looks like. So 18.5 was, what was all those other things? This is mainly for foreign currency. However, it could translate to any other market as well. So, does that answer your question, though?
Yes, it does.
Okay.
Thank you.
So, yeah. So, if you go down, if you see 17,000 down here, that's a major quarter point because it's 1,000 points below 18, and then you got 17.5, and looking at it, see the support. And so essentially, I guess this could be utilized in other markets just to kind of represent round numbers and significant areas, I guess. I really haven't looked back in time to have concrete evidence of that, but it's pretty substantial. So.
Well, like I said, I've done quarters type theory based on based on a prior day move or something like that, and there is definitely something to it, and basing it on round numbers and the apozones, putting the apozones in there, I think it's pretty strong. Thanks.
Yeah, I agree, and that's what I was telling Gabe. I mentioned this to him, and he was like, "Oh, that sounds very interesting." So that's how we got to where we are today. So this is just showing. Well, this doesn't have my chart with the numbers on it, but it's just how I use it. And like I said, for me, it's more conviction of what's going on with price. Why is it where it is? Where has it been? And what is going to give me conviction to take a trade, long or short? How am I going to be able to make money from this today? And so as an example, here's my two charts that I looked at this morning. And we had the hesitation zone at the major quarter point at 7,500, which it went through yesterday, and then moving in, because I get up at 2 a.m. or 1:45 to trade. I want to see, like Gabe speaks of, the higher time frame, the 60-minute, the 15-minute, to show some zones, and on the 15-minute zone at almost, gosh, what time is it? Looks like it was right around 3 o'clock. We had a bounce off of the zone, and I was looking for the money bounce off of that because obviously price turned around at 75.50, so I got short and rode that down, and then got out, and then I got short again, and I've been short since 75.25 area, and waiting to get out of this thing at 75.02. Now, the thing is with these guys, these banks, is that they try to make it look like quarters theory doesn't really exist because they don't always take price to the exact pip or point, if you will. However, it does, as I showed on these charts earlier. This is, you can see where prices turned around. 79.25 is 75 pips below 80. And you saw how price came down. That's reached that blue dotted line right there at 79.25. That's a hesitation zone. And price hesitated there and then decided to continue down to the next quarter point, the red zone, the red. And then went down to the hesitation zone below that, which on the half quarter points, which is 125 points, is only 50 points below the half quarter points. and then it hit that hesitation zone, as you can see, at 78.25, and then bounced back up to 78.75, which is the half quarter point. So, you know, it's kind of like, you know, looking at the higher time frames where you can look at a chart without the apozones on it, and then you put the apozones on it, and you're like, okay, I anticipated zones being here and here, but I didn't anticipate them there, and it just fills in the gap, and that's kind of how I use it. So that's all.
I think Tom has a question.
Yeah, he does.
Hey, Tom.
Hold on one sec. There he is. Tom, you there?
Hey, Tom.
Hey, Gary. Thanks for taking time with this. My question's pretty simple. We always like to joke. I mean, we all like the zones, and I know people that use zones with fibs. And the comment that's often made to remind people is that 50% is really not considered a fib number. And obviously 50% is one of your quarters. And I've noticed that price reverts to the mean very often, and I take the average of the Globex for intraday trading, the Globex in the previous day's high and low, and I look at the midpoints on that, and I just wanted to make that comment and see how that might work into some of the stuff you look at, you know, taking into account the 50%.
So generally speaking, the 50% I will use on a daily time frame. I'll use the fibs on a daily time frame because it's the highest. Well, it's not the highest, but typically that's where you have the bigger swings. I mean, yeah, they're in the 4-hour area as well, but you know, the quarters theory is just a set. It's like a grid. Okay, so and like I said earlier, you know, sometimes price action, which is the leading indicator, doesn't always touch these lines exactly to the T. So when you're drawing fibs, fibs will not always line up with these numbers. They could be 5 or 7 pips above or below a certain point on the quarters theory chart. However, if you have more things, if you have confluence in that area, then it just reiterates that, you know, it would provide support or resistance or supply and demand in that area. So the grid is a constant.
Okay.
All right. So the fibs aren't always a constant. Well, the fib numbers are constant based upon current price action. And like I said, most of the time there are some areas that don't always line up. For example, I use the weekly and monthly pivots when I trade foreign currency because those are very significant. However, there are times where price action will test out those areas. If you look over here to the left on this chart, this is the 2 range bar chart. We had 7,500, which is the red line here. You guys can see my X moving around. And then the weekly pivot was right there, 7504. So I have not drawn fibs on this to see where price action could potentially reverse based on the previous day. But I use this as my grid, if you will, of where price has been, where it's potentially going before it changes direction or continues down, if you will. It's a set format. It's kind of like, you know, you get on the freeway, you look at the grid of your city, and you look at the freeways. Those are always constant, right? However, depending on traffic that day, you know, where things are backed up, you might take a different route. And it's kind of like, that's how Apozones is, along with these numbers, where it's showing you, hey, we got cloudiness here, you know, or we have traffic here. You might want to, you know, reroute your route to wherever you're trying to get and change direction. So that's what I use, and those numbers just substantiate that. You know, depending on price action, Apozones just says, hey, based on price action, we've got supply here or we have demand here. Yeah, if I can answer anybody's questions, I mean, I'm in the Appazone room. If you guys have any questions after today. But, you know, I just wanted to kind of talk about how I use it and, you know, how I use it along with Appazones to, you know, get more conviction on entering trades. So.
Thanks so much, Gary, for sharing. I really appreciate it. It was very, very insightful, and I really like it for the forex markets a lot. I think it's very interesting because for me personally, I see the whole numbers as being a fractal, yet it's independent of a time frame. So it's
Right.
always going to be the same numbers regardless of scale, which is very unique in this trading world because we're always talking about relative price. This kind of goes outside of relative price in some ways, but yet there's a lot of similarities, as you and I have seen, of where relative price, relative support and resistance, supply and demand meets up very, very nicely with this type of theory.